So as an economist, as you look at the broad spectrum of spenders, uh, with extra savings dwindling, especially as you said on the low income scale, uh, do you see where consumers are starting to choose to cut back and tweak their spending?
Well, we've seen a pullback in some of those big ticket items, so furniture, for example. So you also have, cars. Now car sales have stayed pretty elevated, but we know from the amount of incentives that really dealers are starting to see a little more pressure on the consumer, and really to entice them to come on the lot, they have to put a little more of those incentives. So the incentive as a percentage of average transaction price has increased a little bit. I think those are some of the leading indicators where you're starting to see the beginnings of a slowdown. Again, this is not a massive type of recessionary type slowdown, but a slowdown nonetheless.
And do you see any areas, especially in terms of luxuries, where people, despite the falling savings rate, still want to spend their money on?
Well, we still see some pretty strong demand for travel. You look at the throughput data that the TSA puts out, so you can track the number of folks that are going through securities stations throughout the country, and travel has certainly been very, very strong. We continue to break uh, new records on the amount of travel. And so it seems as if, that component is remaining pretty solid. And of course, we're peak travel season right now, so it's important to compare apples to apples here. So you compare at this stage of the summertime relative to previous years. Demand for travel is still strong. That's certainly going to be good news for restaurants, for those in the accommodation sector, the hotels, et cetera.